Hello students, I hope everyone is preparing well for the upcoming September 2024 exams. And the purpose of making this video is to explain corporate and other laws mock test paper series 2. Earlier I did a video on mock test paper, but that paper belongs to series 1 and this mock test paper belongs to series 2. And before I actually start mock test paper discussion, let me give you one important suggestion. The important suggestion for getting good marks is clear and understandable handwriting. If your handwriting is clear and understandable, definitely you will get good marks. And today, valuation is happening digitally. After completion of your exams, all your answer booklets are scanned and loaded in tablets. And these tablets are given for valuation. And one more point, see, we are writing exam for 3 hours. And do you think valuation will happen for 3 hours? No. Valuation will be done in 15 to 20 minutes if it is a theory paper, or 25 to 30 minutes if it is a problematic paper. So with your handwriting, if you are able to keep valuer in comfortable position, then you will get good marks. Understood? Everyone. Suppose your answer is correct, but your handwriting is not clear. Definitely you will end up with getting a less marks. So handwriting is must and should. You have to maintain clear and understandable handwriting. Chalo, let's continue our discussion with mock test paper. As you all know, our final paper and mock test paper, you will find two parts. Part 1, multiple choice questions. Part 2, descriptive questions. In part 1, we have no choice. We are having 15 questions. Each question carries 2 marks. For correct answer, we will get 2 marks. For wrong answer, we will get 0 marks. In part 2, except question 1, for remaining questions, we are having one question choice. Is it clear? Okay, part 1, case scenario based multiple choice questions. First one, XYZ Limited was incorporated on 1st April 2023. The board of directors within the required time frame appointed Mr. A as the first auditor of the company on 20th April 2023. Come on, tell me, what is the time limit for appointment of first auditor? So here companies are of two types: government companies, non-government companies. Government companies, C&AG shall appoint first auditor within 60 days of registration of company. If C&AG fails to appoint first auditor within 60 days, then board of directors shall appoint first auditor within next 30 days. If board of directors fails to appoint first auditor within next 30 days, then members at extraordinary general meeting appoints first auditor within next 60 days. Clear? In case of non-government companies, board of directors shall appoint first auditor within 30 days. In the case scenario, nothing was mentioned whether XYZ Limited is a government company or non-government company, not given. So here you can make an assumption. XYZ Limited is a non-government company and the appointment by board of directors on April 20, 2023 is valid because it is within 30 days of registration of a company. Next one, Mr. A was tasked with the auditing of company's financial statements for the financial year 2020-23. See, there is a printing error. Company was incorporated on 1st April 2023. That means first financial year is 2023-24. But it was mentioned financial year as 2022-23. That means there is a printing error. You just ignore, no problem. He held office until the conclusion of first AGM, which was held on September 30, 2023. Come on, tell me the tenure of first auditor. No, first auditor who was appointed by the board of directors, he can continue to hold the office till the conclusion of first AGM. Yes. Next, during the AGM, the shareholders decided to appoint Mr. B, a partner in the audit firm MNO LLP, as the new auditor. See, here we can appoint two persons as company auditor. One is individual who is a chartered accountant holding certificate of practice, and the other one is firm of auditors. But the condition is majority of partners in the firm must be practicing chartered accountants and they should practice in India. Understood? We assume that all the conditions were satisfied and MNO LLP is eligible as an auditor of the company. Fine. MNO LLP is a limited liability partnership incorporated under LLP Act 2008. Mr. B and his firm were appointed to hold the office from the conclusion of first AGM until the conclusion of 6th AGM in 2028. 5 years later, in 2028, the company is considering whether to reappoint Mr. B and MNO LLP for another term. The shareholders are discussing the provisions of Companies Act 2013 and the implications for reappointing the same auditor or audit firm for multiple terms. So here the question is rotation of auditors. If rotation of auditors concept is applicable, then company can appoint a individual as a company auditor for one term of 5 years, a firm of auditors for two terms of 5 consecutive years. So here the existing auditor as well as proposed auditor is a firm, MNO LLP is a firm of auditors. So definitely, yes, even if rotation of auditors concept is applicable, the company can still reappoint MNO LLP for one more term of 5 consecutive years. Understood, everyone? Let's see. On the basis of above facts and by applying applicable provisions of the Companies Act 2013 and the applicable rules therein, choose the correct answer of the following multiple choice questions. Let's see. Who was responsible for appointing the first auditor of XYZ Limited, and within what time frame should the appointment have been done? So XYZ Limited, non-government company. So first auditor can be appointed by board of directors and the time limit is 30 days of registration of company. So accordingly, option B is correct answer. How long can MNO LLP as an audit firm hold office as the auditor of XYZ Limited according to the Companies Act 2013? So MNO LLP audit firm can be appointed for two terms of 5 consecutive years. So the correct answer is option B. Correct option is correct option is option B. Suppose rotation of auditors concept not applicable, then individual or audit firm can be appointed for next one term of 5 consecutive years. There is no problem. Next one, if XYZ Limited wants to reappoint MNO LLP for another term after 2028, what does the Companies Act mandate? So MNO LLP can be reappointed for another term of 5 years. MNO LLP can't be reappointed as they have already served one term. Wrong option. MNO LLP can't be reappointed as they have already served two terms. No, 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 no. They served only one term. MNO LLP can be reappointed, but the tenure must be reduced to 3 years. Again, this is also wrong option. So the correct option is option A. Understood? Next question. What is the maximum tenure for which Mr. A as the first auditor of XYZ Private Limited can hold office? The first auditor can hold the office from the date of appointment till the conclusion of first AGM. So accordingly, from the date of appointment until the conclusion of first AGM, correct option. From the date of appointment till the conclusion of second AGM, wrong option. From the date of appointment till the conclusion of third AGM, wrong option. From the date of registration of company until the conclusion of first AGM, that is 30th September 2023. See, conclusion of first AGM correct, but from the date of registration of company, this is wrong. This is wrong. So accordingly, option A is the correct answer. Next one. By what date the copy of annual return is to be filed with the registrar of companies in case of first AGM of XYZ Limited? See, for calculating the due date of filing annual return, date of AGM is important. If you observe case scenario, so first AGM was held on September 30, 2023. From this date onwards, yes, company is having 60 days time limit. So within 60 days of conclusion of AGM, company is required to file annual return with ROC. So 30th September, add 60 days. So accordingly, the correct option is 29th November 2023. Understood? So here, due date for filing annual return, you have to remember the time limit. The time limit is 60 days from the conclusion of AGM. Next scenario, case scenario. In 2023, Tech Innovations LLP was established as a limited liability partnership under the Limited Liability Partnership Act 2008. The LLP was formed with two partners, Alex and Jordan, who contributed equally to the capital. Alex contributed 5 lakhs while Jordan also contributed 5 lakhs. The firm was registered with the Registrar of Companies on 1st April 2023. Okay, no problem. Tech Innovations LLP operations focused on software development and technology consulting. As per the LLP agreement, Both partners shared profits and losses equally. The LLP agreement also stipulated that any changes in the partnership, such as admission of a partner, transfer of interest, requires the consent of both existing partners. So, changes in partnership requires consent of both existing partners. In June 2024, Tech Innovations LLP decided to admit a new partner, Priya, who brought 2 lakh rupees as her capital contribution. This change was duly recorded and filed with the Registrar of Companies. Furthermore, the LLP decided to hold an annual general meeting within 6 months from the end of financial year to approve financial statements and discuss business matters. For companies, whatever financial year concept we are following, for LLP also the same concept. Understood, everyone? So financial year closure date, in general cases, I'm telling you, in general cases, financial year closure date is 31st March. Every year 31st March. On the basis of above facts and by applying applicable provisions of Limited Liability Partnership Act 2008 and the applicable rules therein, choose the correct answer of the following multiple choice questions. As per LLP Act 2008, what is required for admitting a new partner into the LLP? Consent of one existing partner, majority vote, consent of all existing partners, both Alex and Jordan. So option C is correct answer. Approval from Registrar of Companies, this is a wrong option. So out of 4 options, option C is correct answer. When is Tech Innovations LLP required to hold its annual general meeting? It is very clear in the case scenario. Within 6 months from the end of financial year. End of financial year closure date is 31st March. So just add 6 months. So 30th September 2024 is the due date for conducting annual general meeting. So option D is the correct answer. Understood? Next one, case scenario 3. In 2024, Global Enterprises Limited, a company specializing in international trade, needed to send an important notice to one of its clients, Mr. Rajiv Patel, regarding a contractual amendment. According to the company's internal regulations and the contract terms, the notice has to be served by post. So, mode of service of notice, it is post. On April 15, 2024, the company's legal department prepared the notice, addressed it to Mr. Patel at its registered address. The notice was properly addressed, prepaid, and sent via registered post with acknowledgement due to ensure highest level of confirmation for delivery. See, generally post is of 3 types: ordinary post, a registered post with acknowledgement due. Ordinary post, he will just deliver that notice. A registered post, after delivering that notice, the postman will collect your signature, the recipient's signature, and it is for government purposes. A registered post with acknowledgement due, this is third type. Registered post with acknowledgement due, here postman will take signature on 2 papers. One is a paper for government, and another one is acknowledgement copy for sender. So here the acknowledgement which was signed by the recipient, postman will collect it and he will send it back to the sender. So registered post with acknowledgement due, here there is a highest level of confirmation for delivery, of course. Yes. So the recipient, once he take the notice, he has to sign the acknowledgement, and that acknowledgement will be sent back to the sender. So obviously it will have highest level of confirmation for delivery. A few days later, on April 20, 2024, the notice was returned with a stamp indicating that it was not claimed by Mr. Patel. That means, postman is delivering the notice, but Mr. Patel is not accepting the notice. So it was returned and indicating that it was not claimed. The legal department recorded the return of notice and noted the endorsement. The company's legal advisor referred to past case laws for similar scenarios to ensure that notice was considered whether it is legally served or not under section 27 of the General Clauses Act 1897, and they reviewed the following precedents. In one case study, United Commercial Bank versus Beam Sen Makija, it was noted that merely sending a notice by registered post without acknowledgement due did not provide sufficient legal protection for proving service. So in one case study, it was held that sending notice by registered post without acknowledgement due will not be considered as valid service of notice. Next case study, Jagdish Singh versus Nattu Singh. This case demonstrated that if a notice was sent by registered post was returned with a refusal endorsement, it was considered served. So it is a valid service of notice. Next, Srimati Vandana Gulati versus Gurmeet Singh alias Mangal Singh. It was established or it was held that if a notice sent by registered post to a proper address was returned with an endorsement like not claimed, it was deemed served unless proven otherwise. So it is a valid service of notice only. On the basis of above facts and by applying the applicable provisions of General Clauses Act 1897 and the applicable rules therein, choose the correct answer. See, as per General Clauses Act 1897, valid service of notice means if it is properly addressed, prepaid, and if it is posted by registered post. So if these three conditions are satisfied, then it will be considered as valid service of notice by post. Understood? Suppose other central acts, special central acts, if they provides for registered post acknowledgement due, then follow those central acts. See, when we refer cases to the General Clauses Act, when other central acts are silent with respect to issue, then we will refer that issue to the General Clauses Act 1897. Suppose if central acts are providing solution, if central acts are providing matters with respect to issue, then follow the central acts. No need to refer the case to the General Clauses Act. Understood? So according to section 27 of General Clauses Act 1897, what three conditions must be fulfilled for a service by post to be deemed effective? So what are those three conditions? Just now I told you. Addressed, prepaid stamps, and posting by registered post. So out of four options, option B is the correct answer. Understood everyone? Option B is the correct answer. Next one. In the case of United Commercial Bank versus Beams and Makija, why was the presumption of service under registered post found to be insufficient? The reason is there. The point is a registered post alone is not sufficient. Registered post with acknowledgement due is required. So in that case study, what was missing? Acknowledgement is missing. So that's the reason the presumption is not working there. So accordingly, the correct option is the notice was sent by registered post but not with acknowledgement due. So option B is correct answer. Next one. What does the case of Jagdish Singh versus Nattu Singh demonstrate about the service of notice? Notice sent by registered post without written endorsement is invalid. No. Notice sent by registered post and returned with refusal endorsement is deemed served. Yes, option B is correct. Just go through the case study one more time. Jagdish Singh versus Nattu Singh. Returned with refusal endorsement, it was considered as valid service of notice. Valid service of notice. So accordingly, option B is correct answer. Understood everyone? Everyone. Next, independent case scenarios. 11th multiple choice question. XYZ Limited, a manufacturing company, had taken a loan from ABC Bank and registered a charge on its assets on January 1, 2022. 1st January 2022. On 1st April 2024, XYZ Limited paid off the entire loan to ABC Bank. According to Section 82 of the Companies Act, XYZ Limited was required to file an intimation with the Registrar of Companies regarding satisfaction of charge within 30 days from the date of payment. Correct. Within 30 days from date of satisfaction, yes, company has to file a form, an intimation with the Registrar of Companies. However, due to an oversight, the company did not submit the intimation until July 15, 2024. To rectify this, company decided to take advantage of the extended period. See, the normal time limit, for the time limit for normal fees is 30 days from the date of satisfaction. 30 days completed, sir. No problem. You can file an intimation within 300 days from the event date. 300 days. That means extended period. How much? Normal time limit 30, extended up to 300. That means additional 270 days. You are having additional 270 days for filing intimation with Registrar of Companies regarding satisfaction of the charge, which allows for an extension up to 300 days. Okay. Okay, in case scenario, normal time limit as well as extended time limit is also given. Okay, fine. With the payment of additional fees, correct. The additional fees for the late intimation was 5,000, and the company's compliance officer needed to calculate the total fees to be paid for the delayed filing. As per the given facts, examine by how many days XYZ Limited was late in submitting the intimation of satisfaction of charge, and what additional fees should the company pay for this delay. In the facts it was very clear, 5,000 rupees additional fees, calculation already done, so 5,000 rupees. We need to calculate delay period. Let's see the event date. The event date is 1st April 2024. 1st April 2024, XYZ Limited paid off the entire loan, and rectification is happening on July 15. So 15 July 2024, yes, rectification is happening, whereas event date is 1st April 2024. Just find out the time period between these two dates. April 30 days we are having, May 31, June 30, and July we are having 15. July, 15th July rectification is happening, right? So total, if you observe, 30 plus 31 plus 30 plus 15, it is around 106 days, right? 106 days. But the normal time limit is 30 days. Just subtract 30 days. 30 days is a normal time limit. Within 30 days, you can file without any additional fees. You can file intimation without any additional fees. Understood? But delay happened, right? So here they're asking about delay period. They're not asking the time gap between 1st April and 15th July. They are just asking delay period. So delay period is 106 minus 30 days. That is 76 days. So how I got 76 days? Just find out the days gap between event date and rectification date. It is 106 days. The normal time period is 30 days. So just subtract 30 days from 106 days. So 76 days is the delay period, and fees is 5,000 rupees as it is given in the scenario itself, case scenario itself. So accordingly, the correct option is option B. Next one, athlete Raju Sharma, a professional tennis player from India, achieved remarkable success by winning a prestigious international tennis tournament held in Paris, France. As a result of this victory, he received a prize money of $150,000 from the event organizers. Raju was excited about his winnings and planned to use a portion of prize money to fund his training and future tournaments abroad. Raju decided to remit $150,000 to his personal account in France to manage his finances and cover his training expenses. However, before proceeding, he needed to ensure that remittance complied with the FEMA 1999, specifically concerning the remittance of prize money or sponsorship of sports activities abroad. Under FEMA regulations, individuals other than international state level sports bodies subject to specific guidelines when remitting amounts exceeding $100,000. Raju was aware that the amount involved in the case exceeded this threshold and sought advice on the necessary steps and compliance. In the scenario itself, the provision was given. This is the provision which is applicable to the question. If a payment is done by international sports body or national sports body or state level sports body, then these restrictions, permissions are not applicable. They can remit. Even the limit of amount is also not applicable. $100,000. The limit is also not applicable for these persons. But if the sender, if the sender, the person who is sending foreign currency, if he is a person other than international body, sports body, national sports body or state level sports body, and if the amount involved is exceeding $1 lakh, then permission from central government is compulsory. Understood? So central government permission here, powers were assigned to concerned ministries, and the applicable ministry in this case is Ministry of Human Resource Development, Department of Youth Affairs and Sports. So option D is the correct answer for 12th multiple choice question. Understood? And I didn't expect, the provision, they're giving the provision in the case scenario itself. I really didn't expect this one. I thought of explaining this provision, but the provision was given in the case scenario itself. So this is important provision actually. See, in FEMA, prohibited current account transactions, permitted current account transactions. These two are very important areas. Definitely you can expect a question from these areas. Next one, capital account transactions, permitted capital account transactions, prohibited capital account transactions. So don't ignore these areas. Even before, 1 hour before examination, if you're going through, corporate and other laws study material, just go through FEMA and just go through current account transactions as well as capital account transactions. Very, very important area. Definitely you can easily score 5 marks. Understood? Next one, Kites Sports Academy. A private coaching club provides coaching for cricket, football, and other similar sports. It coaches sports aspirants pan India. It also conducts various sports events and campaigns across the country. In 2002, to mark the 25th year of its operation, a cricket tournament is being organized by Kite Sport Academy in England in the first half of the April. The prize money for winning team is fixed at USD 40,000, whereas in case of runner-up, it is 11,000 USD. You are required to choose the correct option from the four given below, which signifies the steps to be taken by Kite Sports Academy. First of all, Kite Sports Academy is not international sports body. It's not a state level sports body. It's not a national level sports body. Understood? If a payment is by international or national level or sports level sport bodies, then FEMA regulations, FEMA restrictions will not apply. Here, payment is going to be done by a person, Kite Sports Academy, which is not a international or national level or state level sports body. It is just a private coaching club. Clear? And next one, the limit is 1 lakh USD, but here they just need 51,000 USD. If the amount exceeds 1 lakh USD, definitely permission is required. Permission from central government, Ministry of Human Resources Development, Department of Youth Affairs and Sports. Permission is compulsory. But here, amount involved is less than 1 lakh USD. Of course, you can easily answer this multiple choice question because the provision relevant to this multiple choice question is already given in the above multiple choice question. Understood? Okay, so accordingly, let's choose the correct option. For remittance of prize money of USD 51,000, Kite Sport Academy is required to obtain permission. No. For remittance of prize money of 51,000, Kite Sports Academy required to obtain prior permission from RBI. No. For remittance of prize money of USD 51,000, Kite Sports Academy is not required to obtain any prior permission from any authority whatsoever, and it can proceed to make the remittance. So option C is the correct answer. For remittance of the prize money of USD 51,000, Kite Sports Academy is required to obtain prior permission from Ministry of Finance, Department of Economic Affairs. Wrong option. So C is the correct option. Next one. A Limited is incorporated on 3rd January 2023. As per Companies Act 2013, what will be the financial year for the company? Very, very simple question. But you need to remember one point. First financial year closure date, financial year closure date and first financial year. If a company is incorporated on or after 1st January, then financial year closure date shall be 31st March of following financial year. Following, that means next year. So 2023, next year means 2024. 31st March. So accordingly, the correct option is 31st March 2024. So option C is the correct answer. In all other cases, suppose company incorporated before 1st January, then 31st March of relevant financial year is the closure date of first financial year. Understood? A charge was created by Cyprus Limited on its office premises to secure a term loan of 1 crore availed from ABM Bank Limited through an instrument of charge executed by both the parties on 16th February 2023. Inadvertently, the company couldn't get the charge registered with the concerned registrar of companies within the first statutory period permitted by law, and the default was made known to it by the lending banker with a stern warning to take immediate steps for rectification. The latest date within which the company must register the charge with ROC so as to avoid paying ad valorem fees, proportionate fees for registration of charge is. So here you need to recap the time limits for registration of charge. For all new charges, that means charges created after commencement of company's ordinance 2019. So I think you all know the date, 2nd November 2018, right? That is the date ordinance was originally brought into the picture. Okay, so from that date onwards, we classify charges as new charges. For new charges, the statutory time limits are first 30 days with normal fees. If this time limit is completed, but still you didn't register the charge, then within 60 days with additional fees. That means here additional 30 days was given. Additional 30 days was given. Sir, no sir, we failed sir. Then it is extended to next 60 days. Next 60 days. But here you need to take ROC approval and you need to pay ad valorem fees. Ad valorem fees. What fees? Ad valorem. Proportionate. So how much amount is involved in the charge? On that we will apply some fixed percentage. That amount you need to pay as a penalty. Understood? So 3 time limits. 30 days normal fees. Next 30 days with additional fees. And further 60 days. That means total 30 plus 30 plus 60, total we are having 120 days. But for first 30 days it is normal fees. Next 30 days additional fees. Final 60 days you need to pay ad valorem fees. Here the question is, to avoid paying ad valorem fees, what is the last date for filing with the register of companies for registration of the charge? Let's see. Charge was created on 16th February, right? So to this, add 30 days, you will get normal time limit. 2023 is not a leap year. So in February, you will have only 28 days. So 28, already 16 days, event happened on 16, right? So 12 days completed. So 18th March, generally 18th March, normal time limit. Next, to this, add 30 days. March month is having 31 days, right? March month is having 31 days. So 31 days, just subtract 18 from 31. It will be 13 days. 13 days already completed in March. So in April, you can take up to 17 days. So 13 plus 17, total 30, right? So 17th April 2023 is the last date. You can avoid paying ad valorem fees for registration of the charge. So how I calculated? Simply add 60 days to the 16th February, you will get 17th April. February we are having 28 days, March 31 days. So April up to 17, 60 days will be completed. 18th day onwards means 61st day onwards. So 18th April onwards, you need to pay ad valorem fees. Understood? So with this part 1 completed, next part 2 descriptive questions. In that first one, New Limited is a company in which Old Limited is holding 65% of paid up share capital. One of the shareholder of Old Limited is made a charitable trust and donated his 10% shares in Old Limited and 50 crores to the trust. He appoints New Limited as a trustee. All the assets of the trust are held in the name of New Limited. Can a subsidiary hold shares in its holding company in this way? So what happened? New Limited is a company. In this company, Old Limited is holding 65% of paid up share capital. That means New Limited is a subsidiary of Old Limited. As per section 19, according to section 19 of Companies Act 2013, subsidiary company after becoming subsidiary is prohibited from acquiring, from holding shares of its holding company. Understood? So subsidiary company can never hold shares of its holding company. But to this rule, there are 3 exceptions. One is as a trustee. Second one, as a legal representative. Third one, before becoming subsidiary, suppose before becoming subsidiary, if this company acquired shares of holding company, then it can continue to hold such shares without any objection, without any problem. Understood? So in the question, it was very clear. Subsidiary company New Limited is holding a shares as a trustee. As a trustee. So it is entitled to hold the shares. So here, this question is asked for 5 marks. And how marks allocation will happen, I'll explain you how marks allocation will happen. See, the general rule will get 1 mark. For this general rule, 1 mark. And for exceptions, we are having 3 exceptions, 3 marks. And for conclusion, you'll get 1 mark. So in this way, marks allocation will happen. So you have to write general rule. Subsidiary company cannot hold shares of holding company. If it acquires any shares after becoming subsidiary, that acquisition, that holding becomes void. 1 mark. Exceptions, 3 points, 3 marks. Understood? So you can observe here, we can conclude that in the given situation, new limited can hold shares in old limited. In this way, marks allocation will happen. That means, suppose you wrote correct provision, you wrote correct exceptions, but you wrote wrong conclusion. No problem, you will get 3 marks. Minimum you will get 3 marks. Suppose you wrote only conclusion, you ignored this provision or you ignored these exceptions, then you will get just half marks only. You will get only half marks, 2 marks or 2.5 marks. That's it. Are you getting my point, students? Everyone. Next question. The government of India is holding 51% of paid up share capital of Surya Limited. That means Surya Limited is a government company. The audited financial statements of Surya Limited for the financial year 2023-24 were placed at its annual general meeting held on 1st August 2024. However, pending the comments of C&AG on the said accounts, the meeting was adjourned without adoption of the accounts. On receipt of C&AG comments on the accounts, the adjourned AGM was held on 29 September 2024. Whereat the accounts were adopted. Thereafter, Surya Limited filed its financial statements relevant to the financial year with the Registrar of Companies on 20th October 2024. Examine with reference to the applicable provisions of Companies Act whether Surya Limited has complied with the statutory requirement regarding filing of unadopted and adopted accounts with the registrar. Here what happened? AGM was conducted on 1st August 2024. Because of some reasons, the meeting stands adjourned. And the meeting was adjourned because of unadoption of accounts. There are some issues with the financial statements. Pending the comments of C&AG, the accounts were not adopted in that meeting and they were adopted in the adjourned meeting. So in this case, generally, the company is required to file financial statements 2 times with the registrar. One is unadopted accounts. The second one is adopted accounts. But in the given situation, company complied with the adopted accounts filing, but it failed in filing unadopted accounts. But no problem, it is done within the due date. It is done within the due date. Within 30 days of conclusion of AGM, company has to file adopted financial statements. Accordingly, company did with respect to adopted financial statements. Let's see the answer and marks allocation. Here 2 provisions, not single provision, 2 provisions are there. One is 30 days of date of AGM and the registrar shall take them in his records as provisional till the financial statements are filed with him after their adoption in the adjourned meeting. So for this, in case of 5 marks, for this 1 mark. Next provision, financial statements adopted in adjourned AGM shall be filed with the registrar within 30 days of the date of adjourned AGM with such additional fees as may be prescribed. 1 mark. Analysis. In the instant case, the accounts of Surya Limited were adopted at adjourned AGM held on 29 September 2024 and filing of financial statements with registrar was done on 20th October 2024, that is within 30 days of date of adjourned AGM. So this analysis is for 2 marks because 2 provisions compiled and 1 analysis provided. Hence, Surya Limited has not complied with the statutory requirement regarding filing of unadopted accounts with the registrar, but has certainly complied with the provisions by filing adopted accounts with the registrar in the due date. Conclusion 1 mark. So in this way, marks allocation will take place. Understood? Maybe 5 to 10% deviation will be there. Of course, 5 to 10% deviation will be there. Sometimes for this analysis 1 mark, for this conclusion 2 marks, it might take place. But in this manner only allocation will take place. Understood? Next question. Mr. A, an Indian national, desires to obtain foreign exchange for the following purposes. Remittance of US dollar 50,000 out of winnings on a lottery ticket. Prohibited. Current account transaction. Not possible. US dollar 1 lakh for sending a cultural troupe on a tour of USA. This is permitted, but central government prayer approval is required. Understood? So 4 marks. Each one carries 2 marks. Of course, for provision 1 mark and conclusion 1 mark. For provision 1 mark, conclusion 1 mark. That means you need to write the provision and you need to write the conclusion. So here A cannot withdraw foreign exchange for this purpose, withdraw for lottery winnings, remittance out of lottery winnings. And second one, you can observe here, the permission is to be taken from Ministry of Human Resources Development, Department of Education and Culture. So this person name, the name of the ministry is also very, very important for getting full marks. Simply if you write Ministry of Human Resource Development, you may end up with getting half mark with respect to that conclusion. When you write Department of Education and Culture, you will get complete marks. Next question. With this first question, compulsory question completed. Next one. What are the powers of registrar to make entries of satisfaction and release of charges in the absence of any intimation from the company, and discuss the matter in light of provisions of Companies Act 2013? So straight away descriptive question. They're asking you powers of registrar making entries with respect to satisfaction of charges where no intimation is received by the registrar from company or charge holder. Okay, see, many students will end the answer, they forget to write these 2 points. And this is also important point for getting complete marks. Understood? One is information to the affected parties, and the second one is issue of certificate. So each of this point will carry 1 mark ma. And for this, for this provision 3 marks. So in this way 5 marks will be allocated. Next, what is the mode of service of documents to the registrar or to the members as the provisions of Companies Act 2013? They're asking about section 20, mode of service of documents. So you have to write all these points, post, registered post, speed post, courier, delivering at his office or address, or electronic mode. If you finish your answer, if you finish this answer with the 6th point, you will get 3 marks out of 5. And you need to write this point for getting complete marks. The point is, if any member requests for delivery of any document through a particular mode and for which he deposited sufficient fees as determined by the company in its annual general meeting, this point carries minimum 2 marks. Understood? See, this is a general answer. And this is a specific point, specific answer. On the request of a member and on the deposit of sufficient fees of the member, company is required to serve notice according to the instructions of the member. Excuse me. So this point, if you forget to write this point, you will get only half marks. Understood? Next one. See, explanation part I already did in the classroom session. I already did in the marathon session. This discussion is just to explain you about allocation of the marks for entire answer. Understood? Explain various provisions applicable to the rules or bylaws being made after previous publications as enumerated in section 23 of General Clauses Act 1897. This is also a straight away descriptive question ma. So you need to write all these 5 points for getting 4 marks. Publish of proposed draft rules bylaws, publish in prescribed manner, notice annexed with the published draft, considerations, and notified in the official gazette. And for headings, don't use other color pen. Just take a pencil and just draw a straight line. Again, straight line means taking a scale, just taking a scale like this and drawing a line. This much is not at all required. Once again, I'm telling you, this much is not at all required. Just free hand draw, just draw it freely. That's it. And wherever you think these words are important, or the time limits, you suppose if you quoted correct time limits and they're important, just draw it with a pencil, so that you can drag, value your attention to that particular point, and you'll be awarded better marks. Understood? So two questions completed, ma. Next one. Navni Limited has accumulated a significant amount in its securities premium account. The company is considering different ways to utilize these funds. Advise the directors of the company on application of securities premium account as per the provisions of Companies Act 2013. So they're asking about utilization of securities premium, and this question is asked for 5 marks. And I was surprised after looking at the answer. Just 5 points were mentioned. Just 5 points were mentioned. Yes, of course, 5 points only. Correct answer, 5 points only. I'll tell you, there is one more part in the answer. See, issue of fully paid bonus shares, writing of preliminary expenses, writing of issue expenses, premium payable on the redemption, buyback. This is the correct answer only. But there is one more part, the additional part is, if a company which is preparing financial statements according to the accounting standards, then they can utilize securities premium only for three purposes: buyback, next one writing of issue expenses, next one issue of fully paid bonus shares. So that part is missing in the answer, so I was surprised why only one part was given, and I advise you to write that part also in the answer. Understood? Better impression, ma. It gives good impression. That's it. Next one. KMN Limited scheduled its AGM to be held on 11th March 2024 at 11 a.m. The company is having 900 members. So this is a public limited company. As per register, it is having 900 members. Then the applicable quorum is 5 members personally present, right? If AOA is silent, 5 members personally present is the applicable quorum. P1, P2, P3 shareholders. So who attended the meeting, by 11:30 a.m. P1, P2, P3 shareholders. So count 3. P4 representing ABC Limited. Representative of a body corporate. If a body corporate is a member, a representative of a body corporate is considered for the purpose of quorum. P5 representing DEF Limited. Yes, considered for the purpose of quorum. P6, P7 proxies. Only members personally present are counted for the purpose of quorum. So representative persons, representatives of other than body corporates are not considered. So here count is 0. Examine with reference to relevant provisions of Companies Act whether quorum was present in the meeting. So 5 members personally present. Yes, there is a quorum. Let's see. Hence the requirement of quorum is fulfilled. Next one. What will be your answer if P4 representing ABC Limited reached the meeting after 11:30 a.m.? See, the quorum, that time limit for checking quorum is 30 minutes from the scheduled time. So 11:30 is the cutoff time. If P4, representing ABC Limited reached the meeting after 11:30 a.m., that means by 11:30 a.m. there is no quorum. There is no quorum. The meeting stands adjourned. Understood? So meeting stands adjourned. If nothing is mentioned, to same time, same place, same day, next week. So since P4 is an essential part of the meeting of the quorum requirement, he reaches after 11:30 a.m. The meeting will be adjourned as provided above. Next one. In case of lack of quorum, discuss the provisions applicable for an adjourned meeting. Same day, same time, same place, next week. In case of adjourned meeting or in case of change of day, time, place, the company shall give not less than 3 days notice to the members either individually or publishing an advertisement in the newspaper. See, normal time limit for giving notice for general meeting is 21 clear days. But in case of adjourned meeting, it is 3 days only. Next one. What happens if there is no quorum in the adjourned meeting? The members whoever present the meeting shall constitute the quorum. So 4 questions were asked, 5 marks. For 4 correct answers, you will get 4 marks and 1 mark, for the provisions, whatever provisions you quoted, for that 1 mark. Very simple. Write a short note on proviso explanation with reference to interpretation of statutes, deeds, documents, 4 marks. So proviso 2 marks, explanation 2 marks. Straight away a descriptive question. Next one. The Board of Directors of Avani Limited requested its statutory auditor to accept the assignment of designing and implementation of suitable financial information system to strengthen the internal control mechanism of the company. How will you approach to this proposal as a statutory auditor of Avani Limited, taking into account the consequences, if any, of accepting this proposal? So here, section 144 is important. As a statutory auditor, you are prohibited from providing certain services. Suppose if you start providing these services, then you are disqualified. You can't continue as an auditor. You can't continue to hold the audit office. So what are those areas? What are those prohibited services? They are not asking in the question. They're just asking you to advise whether as a statutory auditor, can you provide these services or not? So for the provision, 1 mark. Analysis, 2 marks. In the instant case, Board of Directors of Avani Limited requested its statutory auditor to accept the assignment. As per the above provision, the said service is strictly prohibited. In case of statutory auditor accepts the assignment, he will attract the penal provisions. So this is for 1 mark. In the light of above provisions, we shall advise the statutory auditor not to take up the above stated assignment. 1 mark. Understood? Next, define the term body corporate as per the provisions of LLP Act 2008. So simple question ma, straight away a theory question. So body corporate, the definition of body corporate. Body corporate means company as defined in section 2 class 20 of Companies Act, and includes, to this 1 mark, includes, 2 marks, excludes 2 marks. So total 5 marks. Next, differentiate mandatory provision from a directory provision. What factors decide whether a provision is directory or mandatory? It is asked for 4 marks ma. So here, factors, for factors 2 marks. For factors, considering, whether it is a mandatory or directory, for factors 2 marks. And for the remaining answer, 2 marks. Here, these points are very important. If it is mandatory, it must be strictly observed. If it is directly, it would be sufficient that when substantially complied with, not 100% compliance. Even if you comply with substantially, yes, no problem. But if it is mandatory, it must be strictly observed. That means 100% compliance is must and should. So 2 marks. Next one, 5th question. Master Sulabha LLP. Subha LLP or Sulabha LLP was incorporated on 1st September 2022. On 1st January 2023, one partner of partnership named Mr. Sulabha, which is registered with Indian Partnership Act 1932, since 1st January 2000, requested ROC that as name of LLP nearly resembles with the name of already registered partnership firm. See, the name of LLP shall not be identical to or resemble with the or resemble to the name of existing company, existing LLP, existing body corporate. Since partnership firm is not a company, not an LLP, not a body corporate, no need to follow that provision. Understood? See, rectification of name is required when the name is similar to the name of existing body corporate. But existing person, it is a partnership firm, it is a registered partnership firm. Of course, registration of partnership firm is not compulsory. Understood? As per Indian Partnership Act 1932, registration is not compulsory. Even after registration, it won't get any, body corporate status. It won't get any separate legal entity status. Understood? So whether the name of LLP should be changed, not required. Explain whether Mr. Sulabha LLP is liable to change its name. No. 5 marks ma. Simple question. For provision, I will allocate 2 marks. For analysis part, 2 marks. Following the above provisions, LLP need not change its name if its name resembles with the name of a partnership firm. And for conclusion, I will assign 1 mark. So Mr. Sulabha LLP need not change its name even if it resembles with the name of partnership firm. Next one. CA Mudit is a partner in SM and Company Chartered Accountants and ML and Company Chartered Accountants. SM and Company are the statutory auditors of Liberal Limited, a listed company for the past 10 years as on 31st March 2027. Advice under the relevant provisions of Companies Act 2013 whether ML and Company can be appointed as statutory auditor of Liberal Limited during cooling period for SM and Company. The answer is no. Why? For all listed companies, unlisted public companies with paid up share capital 10 crores or more, private limited companies with paid up share capital 50 crores or more, and all the companies having loans, borrowings 50 crores or more. For these companies, rotation of auditors concept is applicable. Rotation of auditors concept is applicable. The auditor who has completed his tenure, he can't be appointed for the next 5 consecutive years. And there should be no connection between incoming auditor and outgoing auditor. If these two firms are operating under a common network, or if these two firms are having a common partner, then both the firms are disqualified during this cooling period. Understood? So accordingly, if you observe, for provision, obviously here I'll assign 2 to 3 marks. For the provision, I'll assign 2 to 3 marks. Why 2 to 3 marks? You have to write that point, common partner. For that point, 1 mark will be assigned. For remaining provision, 2 marks. In the above given question, SM & Company has also completed its 2 years of 5 years, 2 terms of 5 years. Thus, ML & Co. can't be appointed as statutory auditor of Liberal Limited during cooling period because CM Mudit was common partner. And this prohibition is only for 5 years, that is up to 2032. After 5 years, Liberal Limited is free to appoint ML & Co. as its statutory auditors. For analysis and conclusion part, I'll give 2 marks. Next one. A Limited declared a dividend for its shareholders in its AGM held on 27th September 2024. Referring to the provisions of General Clauses Act 1897 and Companies Act 2013, advise the dates during which A Limited is required to pay dividend. See, this question is related to payment of dividends and General Clauses Act. And the point is calculation of time limit. While calculating the time limit, whether the event date, starting date, that is 27th September 2024, considered or ignored is the point here. The point is ignored. So you can check the answer. 27th September is not considered. So under the provisions of section 127 of Companies Act, a company is required to pay declared dividend within 30 days from the date of declaration, that is from 28th September 2024 to 27th October 2024. So event date is excluded. In this series of 30 days, 27th September 2024 will be excluded and the last 30th day, that is 27th 2024, will be included. Accordingly, A Limited will be required to pay dividend within 28th September 2024 and 27th October 2024, both days inclusive. See, for provision, I'll give 2 marks. For analysis and conclusion, I'll give 2 marks. Next one. Last question, ma. The Board of Directors of ABC Limited called an EGM upon requisition of members. However, meeting was adjourned on the ground that quorum was not present. See, if a meeting was called because of requisition of the members, and in that meeting, if there is no quorum, the meeting shall not stand adjourned. The meeting stands cancelled. Understood? In the light of provisions of Companies Act 2013, the Board of Directors on the decision to adjournment of the meeting. So adjournment is not valid, ma. Meeting stands cancelled. Simple 5 marks question, ma. Simple 5 marks question. Just write these 2 paragraphs, you'll get 4 to 4.5 marks. Next one. Jorab Garments Limited served a notice of general meeting upon its members. The notice stated that a resolution to increase the share capital of the company would be considered at such meeting. Roshni, a shareholder of the company, complained that the amount of proposed increase was not specified in the notice. Is the notice valid? So they're asking about an explanatory statement. Items to be discussed in the meeting are of 2 types: ordinary business, a special business. Ordinary business, only 4 items are covered: financial statements adoption, board report adoption, audit report adoption, appointment of the auditor and fixation of the remuneration, declaration of the dividend, and appointment of the directors in the place of those retiring one. So for these 4 matters, explanatory statement is not required since they are ordinary business items. and any item other than these four items are considered as special business items. Accordingly, proposed increase of capital is a special business item. With respect to special business item, explanatory statement should be compulsory. Explanatory statement is compulsory. So in that explanatory statement, you have to disclose the nature of interest, nature of the concern of the KMP promoter director in that business, and how much you want to increase it, and why you want to increase it. Understood? All these points you have to mention, or else that notice is invalid. So here, you need to write the complete provision. Understood? So objection of the shareholder is valid since the details of the item to be considered at general meeting are not fully disclosed. Next one. Shaltom Limited, an international corporation headquartered outside Japan, is interested in expanding its investor base and thus planning to issue a prospectus for the subscription of its securities to the potential investors in India. However, company has not yet established a physical place of business within India. As a consultant for Shaltom Limited, you have been asked to provide guidance on legal procedures and compliance requirements that company must follow to issue the prospectus in India. Now, before issuing prospectus in India, company has to satisfy certain conditions. What are those conditions? Let's see. Before issue, a copy certified by chairperson and two other directors as having been approved by the resolution of the managing body has been delivered for registration to registrar, and the prospectus states on the face of it that a copy has been so delivered, and there is endorsed on or attached to the copy of prospectus any consent to the issue of prospectus required by section 388 and such documents as may be prescribed under rules. Accordingly, Shalto Limited, a foreign company, shall proceed with the issue of prospectus in compliance with the above stated provisions. And the important point, here, place of establishment of the business, place of business, incorporation in India, all these are not a matter at all. Understood? So no person shall issue, circulate, distribute in India, offering for subscription in securities of a company incorporated or to be incorporated, future foreign companies outside India, whether company has established or has not established. Next, when formed, will not establish a place of business in India unless. So these are the important conditions. Understood? And coming to the last question, explain the meaning of the term foreign exchange as per the provisions of Foreign Exchange Management Act 1999. Here you need to write the definition of foreign exchange. Simple question, ma. So 4 marks. So foreign exchange means foreign currency to this 1 mark, and includes 3 points are given, 3 marks. So total 4 marks. Understood? If you miss this particular line, 1 mark gone. And if you miss any of these 3 points, yes, 1 mark will be deducted. Understood? So in this way, your paper will be valued and you'll get score accordingly. So with this discussion of MTP series 2 also completed. So all the best for the upcoming exams. Thank you.